So I went back in time and I looked at the top gappers every single day over the last few months, and I found the most accurate moving average crossover strategies, documented them, and then broke them down in this video. So make sure you stick around, hit the like, hit the subscribe button, and let's take a look. Okay, so the first strategy on my list combines the red to green move and the moving average crossover strategy. For the moving averages, I'm using the 26 SMA as the long-term average and the 12 EMA as the short-term. When this happens, you have two different groups of traders that are ultimately looking to buy at a specific level. Some traders are looking for the red to green move at the open within the first 5 to 10 minutes, and other traders are looking for the moving average crossover. And so when you use the crossover to determine an entry and help you gain momentum with the red to green move, it just has a ton of momentum and volume in your direction for you to take advantage of. And especially if you just choose to scalp this type of trade, then it could be an extremely accurate one to add to your trading playbook. In order to have success with this combo strategy, there's a few different things you really need to focus on. The first one is extension, and we talked about it earlier because the higher a stock opens up at the opening bell, the more likely it's actually going to fail after that. And if you can find stocks that actually pull back before the open, those are much more likely on a percentage basis to rip up and run at the opening bell. And so those are the stocks you should really pay attention to. And so when we're trying to attack this type of combo setup, we're first looking for the red to green move. So we need a stock to actually pull back before the open and then actually drop a little bit after the open. That way it sets up enough for the crossover strategy, and then when we actually get the crossover and the stock runs up and then pulls back, we have a really nice entry to take advantage of that usually works and has been pretty successful in my own small account day trading on Thinkorswim. Just to give you a better example of how to approach this trade, let's go ahead and look at a live example using Thinkorswim on demand. Okay, so I know I went over a video using the moving average crossover setup in the last few weeks showing you exactly how to approach it. I'll link that video in the description if you want to check out just that specific strategy, but in this video we're looking for a mix of the red to green move, which takes advantage of a stock dropping down and then reversing at the open, breaking the previous opening range high, and that's where we're ultimately going to enter this position. It's combining that specific setup, the red to green, with the moving average crossover, which just uses the 12 EMA and the 26 SMA. And so we're using AMC as an example here, and the first thing we want to look for is a stock that shows decent volume in pre-market like AMC here, but has actually pulled back some into the opening bell. And so for instance, if AMC was opening up really close to this 725 high right here, we really wouldn't like it because that's just too extended of an open. There's going to be a lot of profit taking when a stock opens up that high, and so in my opinion it's much better looking for a stock to actually drop before the open. And so once we get a stock that drops, the next thing we're really focusing on is the stock forming a really tight, obvious range at the opening bell. And so in the first 5 minutes after the open, AMC is a great example of this because we have this really nice tight range between 704 and about 685. And so it's just a really tight, about 20-cent range that we can take advantage of. And so once the stock actually looks to reverse this level and breaks that previous high while also crossing over when we have the 26 SMA dropping below the 12 EMA, when both of those happen at the same time, it just gives us a lot of momentum to take advantage of. And so we have AMC reversing once the stock actually breaks this high and then just does a little pullback so we can get a tighter risk. That's where we're going to look to enter this position. Again, the key is that it pulls a red to green move in the first 5 minutes, but also shows the crossover setup happening at the same time. And so we have that break and we can look for just a little dip for us to take advantage of on the next candle, and that's what we're ultimately going to use as our entry. And that will protect us from getting faked out as much, and it'll give us a little bit better risk reward. And so there's a little dip. We're just going to jump in there with 1,500 shares, and we're going to look for the stock to push up and obviously make some money for us. I think a really nice reward target in these instances is just the previous pre-market high. You can see again that level is right around 725. You're going to have a lot of profit taking there, and it's also just going to be a really big level for you to kind of take advantage of, use as support and resistance. And so we can take a partial there just to lock in some profit. We're still holding 500 shares of this position, and we can just wait for it to hit that pre-market high and then get out the rest right around there. I think that's a really easy way to approach this trade. It's really simple. It uses some really nice levels for new traders and experienced traders to really watch, and I think it just works a large percentage of the time, and so that's how I'm going to look to approach this setup. Okay, so the next strategy on my list is using the 3 and 4 bar play combined with the moving average crossover. This worked an incredible amount of the time and showed to be really profitable as well. As for the conditions for this specific setup, it's very similar to the last one in that we need the 26 SMA to be above the 12 EMA for the crossover to actually set up. That's really why we need the dip before the opening bell. We need a good volumed gapping stock, but we also need that drop so that the 26 SMA can be above the 12 EMA. Because if the stock opens up too high and we don't get that dip or drop before the open, the 12 EMA will usually be above the 26 SMA, which is no good and is really a short setup. And so for this instance, we need to make sure we get that dip before the open so that this strategy and setup can be there for us to attack. And just to break down exactly what a 1 minute pullback or 3 bar play actually is, we're just looking for one red candle as a pullback level, which is significant because a lot of traders are actually jumping in on these type of pullbacks. And so if you look at this example, we have a really large green candle and then we have a nice 1 minute red candle pullback that a lot of traders are jumping into, giving it momentum. And so then once that range actually breaks and we get the crossover setup at the same time, that's going to give it a lot of upward momentum that we can ultimately attack. And so with all of that said, just like the last one, let's go over one live example using Thinkorswim on demand here as well. And so to use MDGS here on August 28th as an example, you can see we had a really nice gap up on this specific day and then a pullback before the open. That made the moving averages set up so that the 26 SMA was above the 12 EMA, and then in the first 3 candles you can see we had a really big green candle and then a shorter red candle. This is key for this specific setup. Like I said, it's similar to the 3 bar play but also the 1 minute pullback, and you don't necessarily need an igniting candle for this one. This one's looking for that range to form with a 1 minute pullback in between it at the first opening few candles. And so you can see this range that was formed here in the first 3 candles, and you can see a smaller red candle after a large green candle. When that happens, we can thus wait for this range to actually break and then get the crossover, and that's when we choose to attack this setup. And so with this instance, you can see the crossover actually going on right now around 163, but in this instance, we're actually going to wait for that range over 175 to break. There's the range break there, and we can just try to ride this one up for a really nice win here, and we have to be patient as well. A lot of the time I'm using a pre-market support or resistance level as my risk in these trades, and so this 165, 166 level has been confirmed a bunch of times here, and so I think that's a really easy risk for us to use in this trade as well. Now that we have this rip, we can start to think about selling and covering some of our shares here. The next step is to find a good reward target for our selling in this situation. Now, if you're really wanting to scalp it, just like the last one, you can use the pre-market high level at about 180, but if you want a little bit more, you can use half or whole dollars, and really that's just personal preference. If you're a more experienced trader, you can even decide to add into some of these pullbacks. If you don't want to, that's okay, and I think new traders need to try to keep it as simple as possible, but you can see we sometimes get these pullbacks back to back with 1 minute pullbacks and 3 bar plays, and so that is something that I tend to attack on a daily basis when I do trade these strategies. We're about to hit 190, and once we do, we'll try to take about 1,000 of these 1,500 shares off, about 2/3 of my position, and then we'll let it work to see if it can actually hit that $2 level, maybe 195. If we don't end up making that, we can just sell the rest of our 500 shares and bank our $150 on the day, making about 10 cents per share, scalping this type of strategy, which is what it's really meant for. And if you trade it just like this, you'll have a pretty solid accuracy rate in my opinion. Anyways, team, that's it for reviewing these strategies. Remember, the lower the float, the more momentum they're usually going to have, and so I definitely have more success when I trade low float stocks using this specific setup. They're usually priced under $10, and so make sure to be specific with the stocks you attack, and good luck in the markets. If you want to help support our completely free content, you can check out a few of these Discords. The first one is our own Discord, which has a lot of great traders there every single morning talking about great stock picks, what's moving, the most recent news, plus more. I know Mordecai's been doing one-on-one sessions as well. It's all completely free, and if you want to join that, I'll include a link in the description. You can also go check out Trader Mike's Discord, which is a super active penny stock Discord that has a lot of great traders that hang out there every single morning. You'll catch me there every morning as well, early in pre-market too, and so I hope you'll join us for that one as well. Again, I'll leave both of those links in the description. You can also go check out Webull. You can get a free stock if you sign up and deposit $100. It's got 0 commission option and stock trades, free simulation and paper trading, plus more, and it's a great way to help support your boy here. And so I'll include all of that in the description. Good luck in the markets, guys. Make sure to hit that like and subscribe button to help support our free content just like this, and I'll see you all later. Have a good day, team.